Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Here we are with another episode of Black and White Market Minute on Life Planning 101. Matt Ervin and Aaron Kennedy with you today. Aaron, there's a lot going on. Powell spoke. The market's moving. What the heck's happening?
We're getting serious now. Pretty rough week. Market was down 4% or so, and it's been a very, very strange week. A lot of what's been taking the brunt of this pain is the safer stuff. The high risk, the NASDAQ, the technology stuff, that's holding up better at this point. And it's still not great. I think tech was down about 3.5, somewhere around in there. So it's still down, but from a relative standpoint.
So when you say safe, you mean the interest rate sensitive stuff?
Yes.
Got
the
it.
Dividend, aristocrats, all the things that were working really good last year have not been working as well this year.
Okay.
And that's okay. There's nothing wrong with that. Those types of companies, the higher quality, they weren't as near as expensive and crazy overpriced like the others.
Right.
So there's not as much to give back. But Powell came out and said, hey, we're serious about this inflation stuff, and we're going to continue raising interest rates with whatever's needed to squash it.
Right.
And the market's looking out there, and they're believing him. We just had employment numbers come out today. Unemployment rate jumped up a little bit.
Wasn't much.
Yeah.
Wasn't much.
But something that very interesting happened. The average earnings that decreased.
Right.
So
did average hours worked.
yes. So if you're out competing for a job, maybe that is, getting a little bit easier.
Right.
So these interest rates may be having the effect that Powell's wanting.
Right. There was an economist on this morning that talked about manufacturing was one of the areas that actually lost jobs. Construction was up a little bit, but they were thinking that maybe some of those higher paying jobs were lost. People didn't necessarily sit out of the labor market too long with the unemployment rate not moving too much. But then the services sector actually ramped up pretty decent with those jobs created numbers, which I think were through the roof again month over month. But they're also indicating, well, that maybe just be replacing the jobs that were lost earlier.
Right.
So it's like, are we really creating work here? I think we're shuffling human capital.
We never know, just to be brutally honest, we don't know. They're going to come back and redo all the numbers 6 months from now. Yeah. They're telling us the story they want us to know at this point. We'll get them all changed. But here in the short term, these numbers that the Fed puts out, it's just to give us an idea of what's going on. Right. But I think you're right. We're shuffling jobs from one hand to the other, and trying to make things look.
Right. Well, and so the real effect, okay, so we know that some of the numbers that come out, like you said, they're absolutely adjusted. But the real effect is the pressure the Fed's putting on banks and putting on consumers with interest rates, because that's actually a direct effect. So we know that's taking place, right? So we're anticipating a raise of 50 basis points here towards the end of the month. They're already talking about that maybe in May, I think. I forget when the next one comes out. So they're talking higher for longer, whatever it takes. People are trying to start predicting what that Powell crystal ball says, which,
Who knows? I think he's going to keep pushing until something breaks. And the interesting thing is we had something break today. The Silicon Valley Bank, SVB Bank, failed today.
Right.
Just the price of the stock was $270. Waking up Wednesday morning, and today it's 60. It dropped 70%, and then it did it again. And then the Fed stepped in this morning and took the bank over.
Right.
SVB Bank, it's not a big name. It's not like a Citi or a Bank of America. What makes it important is this is the bank that the big institutional money managers used. You know, if you needed to go get a loan to go buy a company,
Right.
you know, in the venture capital space, private equity space, that's where you went. And it just dried up.
Right.
So, I mean, if you're trying to peel back the onion, what this is really saying is things are slowing down. But the economy, the money is not there in these private deals, and things are slowing down. So the net effect of what the Fed is doing, I mean, this could be the start of, hey, it's working.
Right.
Hopefully, please.
Yeah, stop the pain, right? So
Yes.
it's like in many regards how that interest rate pressure is not trickled all the way through the consumer. And we've talked about that a lot over the last several weeks, but this kind of is where it starts, because as companies, venture capital, you buy the company, it grows into things that are now household names. So it then trickles into the consumer's pocketbook.
That's exactly right. And the economic downturn, market downturn, usually lasts a little bit under 2 years. And, if this slowdown has really been in effect since last March, I mean, this is lining up to look like every other downturn.
Right.
We're more than halfway through it. The economy is starting to break. The Fed should have to make a decision. And the market climbs out before the actual economy does. These are the things we're looking for. When does the economy start to have the effect of what the Fed is doing? And it looks like that is happening.
It's starting to do it.
It is starting.
Yeah.
So,
Yeah.
getting closer, guys.
So we're
Getting
sure
closer.
gonna watch some of that data that comes in, but keep it in perspective for accuracy, and watch the street, really. What happens on Main Street, right?
Yes.
So, well, that's good, Aaron. We're getting into time today. Do you have any last minute thoughts before we break for today's episode?
No. Just everybody's, we've been talking about this for dang near a year now.
Right.
This is what we've been expecting. So, nothing's really got us by surprise. We've been planning for this. Try not to watch financial TV shows right now. They're going to start preaching the doom and gloom if things start going the other way. So just tune it out.
Yeah.
Got you covered.
That's right. Well, that's all we have today for today's episode of Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.